Okay, good afternoon once again, everybody. So we'll be starting our class for today. Today we'll be looking at mining taxation. The material was sent to the platform on Friday. So basically, what we'll be looking at is just what happens in the mining industry. And there's really nothing special about this topic. Of course, we'll still be referencing the Company Income Tax Act, CITA, and any other Finance Act 2019, 2020, and so on. So our guide is still, and of course, Personal Income Tax Act for the PE and the rest of them. So, but there are basically some activities that are peculiar to the mining industry. And that's what we are going to be taking note of. Those are differences that can actually be of significance to us. So we'll be looking at them, and we'll be looking at how the mining industry is being run, the administration part of the mining industry. We'll also be looking at the tax incentive, which is very, very key and very, very important to us. Of course, this is advanced taxation. So we are going to be concentrating more on the tax incentive that are available in this industry. At least we'll be able to say some few things about those incentives. You know, if you are in this particular industry, or you plan to work in this type of industry, or you even want to, be a resource person that will give advice, on this particular industry. So let's just look at the material that was sent to us on Friday. Administration of the Nigerian minerals, subject to the provision of the Mining Act. Yes, we'll also be making reference to from the Mining Act. So basically, these are some of the acts that we'll be referencing. Subject to the provision of the Mining Act, the minister shall, please take note that the ministry in charge of this mining industry is the Ministry of Mines and Steel Development. And we know the current minister, this man, Alake Abi, yes, very close to the president during the campaign and all that. And he has been in the, that corridor for a long time, a politician and all that. Dili Alake. So he's the current Minister of Mines and Steel Development. So whenever we are talking about, or we are referencing the minister shall, we are referring to the Minister of Mining, or the Minister of Mines and Steel Development. Now, so what are the basic functions of the minister? Number one is to ensure the orderly and sustainable development of Nigerian mineral resources. Two, develop a well-planned and coherent program of exploitation of mineral resources, taking into account the economic development, ecological, and environmental factors. When we talk about the mining industry, we are talking about an industry that is involved in basically exploitation of mineral resources. For example, maybe limestone, gold. And all other mineral resources that are in depth in the down in depth below the ground level. So, as a matter of fact, the mining industry is one of the most lucrative industry that you can ever think of. Apart from the oil and gas, mining industry too is very, very key, because if you're eventually going to mine and you go and hit gold, you know how much that would worth in billions of dollars. So it's a very, very lucrative industry, although it has its own disadvantages, because you can go into this business and at the end of the day, you will not, you keep digging and digging and digging and you will not find anything. So a lot of research usually goes into this type of business, into this type of, company, industry, and all that. Now, number 3, the subject to the provision of the Mining Act, the minister shall monitor compliance with community development agreement by industry operators. Also establish the procedure for monitoring development in the solid mineral sector and encourage private sector investment in mineral resources development. There are a lot of them there, please. You can just go through them. Those are basically the administrative parts, the provisions, the duties of the minister when it comes to the mining industry. But one thing I want us to take note is the establishment of department. There are basically 2 departments that are very, very important in this industry. And number 1 is Mines Inspectorate Department. Mines Inspectorate Department. And the second one is Mines Environmental Compliance Department. Mines Environmental Compliance Department. So what are the duty of, or what is the duty? The duties. What are the duties of the Mine Inspectorate Department? What are the mines and duty of Mines Environmental Compliance Department? For the purpose of carrying out his function, that is for the purpose of the minister to be able to carry out his function effectively under this act, the minister shall establish in the ministry. So these 2 departments are very, very crucial. Then number 3 is any other department that the minister feels he should. But very, very important, these 2 departments must be established. Now, what are the duties of this department? Or functions? We can say functions. What are the functions of this department? Let's take a look at the first one. For the Mines Inspectorate Department. The Mines Inspectorate Department shall, in addition to any other functions prescribed by this act and subject to the direction of the minister, A, exercise general supervision over all reconnaissance, exploration, and mining operations to ensure their compliance with the act. So one of the major functions of this department is what? Is supervision. They supervise. They supervise the mining activities. They go to different mining companies and supervise them to make sure that they are in compliance with the laid down procedures, the laid down rules and regulations. Also supervise and enforce compliance. Yes, so enforcement. They enforce compliance to enforcement. Enforcement. C, prepare and render records, reports, and returns as required by the minister or as prescribed by regulation. So at the end of the day, when they go out for supervision, for enforcement, they come back, of course, with a detailed report on what is being carried out. So they also carry out investigation and inspection. They carry out investigation and inspection. Investigation. They also carry out inspection on the facilities of the mining companies. So those are some of the functions that is being carried. Then they review and recommend. Of course, in their report, there should be recommendation and all that. So review and recommendation to the minister. Review and recommendation to the minister, programs for controlling mining operations. So let's look at the other one for environmental compliance, Mines Environmental Compliance Department. What are the functions? The Mines Environmental Compliance Department shall, in addition to any other function prescribed by this act and subject to the direction of the minister, A, review all plans, studies and reports required to be prepared by holders of mineral title in respect to the environmental obligation under this act. So they review all plans. So they are more of the environment. You get, so this mines environment compliance, they are more of the environment that these companies are located. Are they actually in compliance with the environmental policies that are on ground? Okay, they are more of the impact of the activities, the mining activities to the environment. You know, this mines inspectorate department, they are more supervising them, you know, making sure that they follow what, you know, is being prescribed in the act, more of enforcement, you know, subscription and all that, you know. But when we're talking about the mine environmental compliance department, they are more concerned about the environment, the environmental factors. You know, a lot of activities goes on in the mining industry and it affects the environment. They dig and dig and dig, you know, and of course it affects the earth crust, the deeper part of the earth, you know. When it comes to, there are different mining activities, you know, that dust and all that pollution. So it's this mines environmental compliance department are more of the impact of the activities to the environment. So they also monitor and enforce compliance by holders of mineral title with environmental requirements and obligation established pursuant to this act, its regulation, and by other law enforcement. So basically, that's just it. It's more of the environmental issues, environmental factors, how it affects, how the activities of these mining companies affect the environment. Now, of course, when we talk about the minister is basically located, or the ministry is located in, you know, they're usually in Abuja and all that. But how do they monitor the activities of each state? Because the truth about it is they can't actually monitor all the activities across the country in just one state. So it's necessary for them to have more like a representative in each state. That's why they come about the committee. We call them the State Mineral Resources and Environmental Management Committee. So the committee are usually representative of this, of the minister in each state, you know. And what are their duties? Number one is the functions of the committee are to consider and advise the minister on issues affecting returns of necessary reports affecting grant of mining titles. 2, consider issues affecting compensation and make necessary recommendation to the minister. 3, discuss, consider, and advise the minister on the matters affecting pollution and degradation of any land on which any mineral is being extracted. So they are basically like, oh, these are the people that are close to the environment, that are close to the state. So whatever goes on within the state is more like they are giving reports to the minister, on the current development on any critical matter. So those are basically the functions of the committee. They are basically representatives in each state. But let's look at the mining incentive, specifically because this is the area that is very, very key to us. Of course, the mining industry is also a pioneer industry. Yes, I hope we know. The mining industry is also the industry that is being listed as part of the industry that have access to the pioneer status. And if they have access to the pioneer status, of course, whatever happens there, whatever the tax incentive that is available to a pioneer company automatically, affects the mining company. So let's look at the mining incentive. Number 1 is tax holiday for an initial period of 3 years, from commencement of operation, and renewable for additional 2 years. Is that not the tax incentive for a pioneer company? Yes. So it's basically one of the tax incentives. They have access to be exempted from income tax for a period of 3 years, and also renewable for additional 2 years based on application. So 3 years, no income tax. Also for an addition of what? 2 years, but of course, based on application. That's the first one. Number 2, let me just run through it. So another one is that, of course, they have access to what? To capital allowance, They have access to initial allowance. It's also a tax incentive if you are looking at it. So when they are telling you what is the tax incentive, you don't even need to be thinking too much. Just look at the ones that you are familiar with and write something on them. So initial allowance, right? Annual allowance, right? Investment allowance, right? Rural allowance. They are all tax incentive, right? Accelerated capital allowance on mining expenditure. Please, this is a critical area that we need to focus on too, especially in our calculation that makes the difference from the normal CIT. This accelerated capital allowance. Mining expenditure are not, okay, you will see it when we are fixing the question that I sent. Their mining expenditures are to be capitalized. They are not to be expensed. They are to be capitalized. Okay, and you can enjoy accelerated capital allowance on the mining expenditure. What do we mean by accelerated capital allowance? For accelerated capital allowance, our initial allowance is how many percent? For accelerated capital allowance, our initial allowance is what? 95% for initial allowance. While annual allowance is what? Nil. No annual allowance. The balance of 5% will be retained, Abi, until the asset is what? Disposed. So, in the mining industry now, the mining expenditure have to be capitalized. That is, they have to be recognized as an asset, and they have to enjoy capital allowance, the accelerated capital allowance of initial allowance of 90%, no annual allowance, then the balance of 5% is retained until the asset is disposed. So I bet you if you can write, you can explain all this within a short period of time you have an exam when they ask you for tax, what are the tax incentives that are available in the mining industry? Of course, you grab all your marks. Although there are other ones that are also available in the material that you can also add to it. Now, what are the allowable and disallowable deductions or expenses? Just like we are used to, all allowable and disallowable expenses under our Company Income Tax Act are also applicable in the mining taxation. So all allowable and disallowable expenses also under your Personal Income Tax Act are also allowable and disallowable in your mining taxation. So there's really no much difference. So the mining titles, mineral titles, that's just the last one. Those are basically the things that we just need to familiarize ourselves with, and we can solve question on that. A mining title can be granted to an individual or a company or a cooperative. The grant of exploration license or mining lease could be competitive bidding or on individual request. Yes, the government can actually say, oh, we have discovered some iron ore in this location in Ondo State. From our research, we believe that this particular area has 95% iron ore, but we want to throw it open. Can say mining companies should come and bid to have access to this place if the government feels that they don't want to go into it. But of course, it's going to be on bidding. They'll say, okay, so we have the license. The license is 25 billion naira. The companies will now come, we'll pay 30 billion. Some will come, we'll pay 35 billion. Because they know that once they have the license to be able to begin activity, of course, they must have done their own projections. They must have done their own research to know that, okay, if they are able to acquire the license and begin activities, maybe at the end of 5 years' time, you'll be looking at 100 billion, So it's usually competitive. Also, an individual can now write to the ministry and say, oh, we want to acquire a license for this area in Sokoto, because we believe that there are possibilities of some deposits. So this one now is the individual that is coming in. Of course, before they begin any activity, they must have gotten the necessary license. They must have done the necessary work to be sure that. So a lot of activities is always going on in this industry. The right to search for or exploit mineral resources is obtained through one of the following mineral titles in the form of a reconnaissance permit, an exploration license, the small scale mining lease, the quarry lease, the water use permit. So all these type of licenses, they have their own peculiarity, they have their own use. So if you want to acquire, for example, a small scale mining lease, it must be something that, maybe it just affects just a small region, But when you want to apply for maybe a proper mining lease, another. So all these, there's a way the ministry have structured it. So whichever one you are coming for, will determine how much you are going to be paid, So a lot of activities goes on in this industry. But for the purpose of our exam, just take note of specifically the mining incentives that are available and this accelerated capital allowance, how you are to make use of it in your exam. Unfortunately, this topic was tested last diet. So we are really not expecting in this diet. But the good thing is we have a good understanding of it, and we can make use of it subsequently for our own personal use. So let's look at the example. Let's look at an example. Let's look at the one I sent to the class May 2022 diet. A very interesting one. We'll look at the computation and we call it a day. So that would be this mining taxation will be like the last aspect of our usual CIT. By the time we move on to another topic that is going to be involving calculation, we're going to be looking at CGT, double taxation, special business, and finally oil and gas taxation. So our regular CIT that we usually do will most likely end with the mining taxation. Now let's look at the question. I believe by now we should be able to handle any question on CIT, Pioneer. Those are usually the questions that come in number one. So any question that comes in number one, you should be able to handle it. Mining taxation usually comes in number 4, the second section or the third section. Now, and investors and policy makers, as investors and policy makers adapt to the global energy transition in a bid to offer an effective edge against swings in oil prices. The federal government has recognized that it is beneficial for the country to diversify its economy. The attention of the country is now towards the development of the solid minerals sector. The Nigerian Minerals and Mining Act 2007 as amended was enacted to regulate the industry. Incentives for operators in the sector as provided for in Section 5 of the Act. One of the earliest investors in the mining sector, Dudes Mine Nigeria Limited, was granted a mining title by the Mining Kede Office for exploitation of limestone in Nkalagu in the southeastern zone of Nigeria. in 2008. In spite of so many challenges the company is facing, it has managed to retain afloat in business. The company has of recent been having tax disputes with the relevant tax authority, and your firm of chartered accountants has been engaged to resolve them. Sorry, please give me a minute. So in spite of so many challenges the company is facing, it has managed to remain afloat in business. The company has of recent been having tax disputes with the relevant tax authority, and your firm of chartered accountants has been engaged to help resolve them. In the 2022 tax return filed by the company, the major area of dispute between the company and tax authority was disparity in the treatment of certified exploration and processing expenditure of 60 million naira incurred during the course of the year. So that expenditure now is that expenditure we are talking about. Mining expenditure, yes, that will enjoy accelerated capital allowance. So there's a dispute. The company is saying, "Oh, we have expensed it," but the tax authority are saying, "No, that's not the treatment. What should have been in treatment is that you should have capitalized it as an asset." You understand? And of course, compute your capital allowance on it, which is supposed to be an accelerated capital allowance. So whenever there's a dispute, please take note in your exam. Is always a signal that is giving you direction to say, "Oh, something, you have to take note of this." So there's no how. Maybe you're working, maybe in maybe in other part of the requirement, they want you to say something on it, or they want you to, it's just an indication that, oh, something has to be done on whatever the dispute is. So your firm is provided with the following extract and supporting documents from the books of the company for the year ended December 31st, 2021. So what's our year of assessment? 2022. Thank you. Now we have the turnover, which comprises of exports, local sundry income, then our expenses, which includes excavating expenses, salaries and wages, directors, remuneration, electricity and telephone, transport and traveling, allowance for doubtful debts, auditors and professional fees, donations, repair and maintenance, depreciation, general/miscellaneous expenses, legal expenses, bank charges, insurance premium, exploration and processing expenditure. That exploration and processing expenditure, which is the 60 million naira that is causing dispute. Have you seen it now? They've expensed it. So is that supposed to be right treatment? No. So we are expected to do what? Add it back. Income tax provision, education tax provision, net profit. The following additional information was provided. 1. The figure for sundry income included an amount of 8,500,000 realized as profits from disposal of the old excavating machine. Please, what's the right treatment for that income? Is a disallowable income. Thank you. So we are supposed to do what? We take it out. We less it. 2. Allowance for doubtful debts were made up of. First one is bad debt written off. Second one is general allowance for doubtful debts. Third one is specific allowance for doubtful debts. Fourth one is loan to customer written off. Which of these are we going to disallow for tax purpose? General, thank you. Any other one? What of loan to customers written off? Is the company a bank? Why are they giving loan to customers?
Yeah, that's true. Yes.
You have to add it back. It's not a financial institution now. So why are they giving loan to customers? Assuming it's loan to staff now. That one, to an extent, you can allow it. But loan to customers, no. It's disallowable. You add it back. 3. Included in donation was 5 million naira given to victims of environmental degradation as part of the company's social responsibility to the host community. Do we allow it or we disallow it? Any objection?
Allow it.
Allow it. Okay, another person say we allow it. Yes, we allow it. It's an allowable expense. But of course, you need to check the donation. The total donation, hope is not up to 10% of the net profits. Always check, please. It's not up to, right? So let's allow it. 5 or 4. 4. Legal fees included an amount of 750,000 naira, which was paid as penalty for late filing of tax return. Allowable or disallowable?
Disallowable.
Your network is breaking. I believe you want to say disallowable. Do you all agree? Madam, you're not saying anything.
Disallowable.
Disallowable. Thank you. Number 5. The tax written down values of qualifying capital expenditure at the end of 2021 tax year revealed that motor vehicles 2 years remaining. Please take note of what's in the bracket, though. They are very, very critical. If it is 2 years remaining, you know that the 25 million, you just slash it by what? By 2, Abi, it's 2 years now. Then you make use of 1 in that period. Abi? Now look at the second one. Furnitures and fitting. Utilized for 2 years. So what do you do with the amount, with the tax down value? You are slashing it with how many? By dividing by what? It has been utilized. It's by 3. Thank you. So which means that it remains how many years? 3 years. Out of 5 years, Abi, the lifespan is supposed to be for 5 years, and you've used 2 years. Now they say you divide it by 3, Abi. So it's another way of presenting the date of acquisition. No. We can't hear you. I can't hear you. I think your network is breaking. Your network is breaking.
2,500.
I can't hear you. Your network
Okay, can you hear me now, sir?
Yes, it's better now.
Okay. Is it the same thing as 22 divide by 5, which furniture, total number of years of furniture and fitting, then multiply by 2.
Oh, okay. Yes, you can do it like that. You can do it like that. But it's a long, but it's the same thing. You should be able to arrive at the same thing. For furnitures, she's saying that for motor vehicle now, since it's utilized for 2 years, we know it is 5 years, 4 years, I mean. So 22 divided 2,500 divided by 4 times 2. Since it is used for how many years? 2 years, and it's remaining 2 years, right? It's the same thing. This is for motor vehicle. Then for furniture and fitting, you are now saying that what? It is, please, let's confirm this. This one is 25, sorry. 25. What do you have here? Then, what do you have for here? 2,500 divided by 5 times 3. What do you have here if you do it like this? Is it going to be the same thing if you just say 25,000 divided by
So
2?
it's the same.
It's the
So
same
verse
thing.
4. Yes, it's the same thing.
So if you divide it by 3. So whichever way you understand it, just what's the value? 12,500, yes. 13,500. Okay. Whichever way you understand it better, just make sure you are doing the right thing. So it's just like saying date of acquisition, the one we usually do, right? So they'll give you the date of acquisition. So you will now calculate, oh, this was the date it was acquired, it has been utilized for so number of years, then it's supposed to remain so number of years. That's how you know the current annual allowance to charge. Of course, you cannot charge the initial allowance because the asset has been in use. So it must have been assumed that initial allowance have been enjoyed. So you cannot enjoy initial allowance. So you can also go through it that other route. Now, required as the manager, tax matters, assigned to handle this matter, you are to forward the report. Required report, to forward the report, to your senior partner, tax matters, showing a computation of tax liabilities of the company for the relevant assessment year, 14 marks. Then B, comment on the tax incentive available to the company in the mining of soil minerals in Nigeria, 6 marks. So that one is in the material. We'll just quickly deal with the A part. Then you write the report. use my so let's deal with the impact. The impact is computation of what? Tax liability. For what year of assessment? 2022 year of assessment. Let's keep our 1,000 here. So where do we start from? Net profit, right? What are net profit? What are net profits? What next? We add back. We add back all our disallowable expenses. So tell me, what are our disallowable expenses?
Depreciation.
Okay. Number one, depreciation. What's the depreciation? What's the value of depreciation?
70,000. 70,000.
Any other one? Okay. General B. Allowance for that today. General. Any other one? Loan to customer. Okay. Which other one? Legal. For fine, Abi. Penalty. How much? Any other one? Let's look at it. What about all those provisions?
Donation.
No. We are already discussing that donations, we are okay with donations. Why are you saying donation? What happened to donation?
9,500. 9,500 on the
Why are we adding back donation? Why do you want us to add back donation? Tell us. Why do you want us to add back donation? There must be a reason why you are calling donation.
He said included in the donation was 5,000, but on the statement we have 9,500. So we deduct 9,500 from 5,000. That's what I.
Okay. No, that's not sufficient now, because we have 9,500 in donation, right? So they told us that out of this 9,500, 5,000 went to so people, right? Went to big things, right? So you're now saying that the balance 4,500, we should now disallow it because they did not tell us how they made use of the remaining 4,500. No, that is not enough reason to now disallow the 4,500. Assuming they now told us that, oh, this 4,500 went to PDP. On that basis, you can now say, oh, this is a political party, and they don't have, they are not registered as part of those that are eligible to enjoy donations from company. Therefore, you disallow it. No, please don't do that. If they specifically tell you, or if they are silent on the remaining donation, please allow it. But if they tell you the remaining donation went to social body or party or people that you know that, oh, they cannot or they are not supposed to be allowed to enjoy that donation, then you can disallow it. I hope you understand, madam.
Explain 10% again. That on that donation, please. Thank you.
Sorry, I should do what? I should explain again.
And you were talking about 10%.
Yeah, exactly. Thank you. So 10% donations are actually allowable, right? But only to the what? To the tune of 10%, based on the provision of the act, that donation cannot be more than 10%. So which means that donation cannot be more than 10% of your net profit. Now, if you look at this case now, this youth mind, what is our total donation that was made? 9.5 million, Abi? Yes. Now let us now check it. Is this donation, is it up to 10%, the allowable 10% of the net profit? What is 10% of the net profit? 10% of 752 is what? 75 million. 200 and what? 227,000, yes. Like this, Abi? 75 million. Can we see it now? So you can see that 9.5 million is less than 75.2 million. Assuming the donation that was made in this case now, let us assume that the donation is 100 million. No, 100 million is, yes, 100 million. Yeah, this 703. Let's assume that it's 100 million. Okay, so you can see that 100 million is actually more than the allowable 75,227,000 in this case. So what do you now do? You first of all disallow the total 100 million. You disallow everything. Before of all disallow. So which means that you'll be having here donation, you add it back 100 million, right? So if you now have that, although you are still going to allow some donations, but first of all, you disallow it. So at the end of the day, when you now adjust the profit, it is now the adjusted profit now. You now allow only 10% of it. So you now still come down and say less donation, 10%, but you are going to do a markup. Don't just say 10%. You now say 10 over 110 of the adjusted profit because you have already added it here. So you now say donation 10 over 110 times the what? Adjusted profit. But that is in the case where the donation is more than 10% of the net profit. Do you understand, madam?
Okay, sir. So we should just put it at the back of our mind that once the donation is more than 10%, we should treat it twice. Subtract and add back and subtract.
Add back and subtract 10%. The reason we are doing a markup is because we have previously added it there. If you treat it, you know, the idea is, it's more like, how should I put it? But that's just the treatment. The treatment is always a markup. And there's some, yes, there's an explanation to it. Well, it's not coming, but just make sure that whatever you are doing is going to be a markup. You see that if you use a margin, 10% of the net profit, I use a markup. Markup will be lesser. You have to suffer something to get some things. There's an example I sent to the class as an assignment. Did we try it? This donation came up. And I told us that also, this same thing we apply to what? Research and what? Development too. Research and development cannot be more than 10% of your what? Of your net profit, Abi. The same application of donation. Research and development too will you apply the same. So it cannot be more than 10%. If it's more than 10%, you do it same. You add it back and you take it out after the adjusted profit. Yes, yes. Also, you do a markup. So what's the next one? Any other one? Yes, thank you. That exploration expenses that we are talking about, how much? 60, that's the main dispute. You are not even saying anything about it. 60 million, Abi. Don't forget, you bring it in when you are completing your capital allowance. Abi, it is capital in nature, right? Yeah.
So I do not understand this donation. So why are you not adding the donation to the disallowable expenses?
Because it's not up to 10% now of our net profit.
Net profit.
If you add all the donations together, it's not up to 10%. And the donation is to victims of environmental degradation now. So it's really allowable because it's for social responsibility. So that's why we are not subtracting. That's why we are adding. We're not adding it back. So it's allowable.
So all the donations are liable.
Okay, thank you.
Okay? Assuming it is allowable, then you add it back. I hope you get the explanation now.
Yes, sir.
Are you sure? You say you are sounding as if you are not sure. Okay, somebody explain. Oh, okay, when I went out. Okay. All right. So any other one? Tell me, what about the provisions now? Income tax provision, tertiary, all provisions are disallowable. You are not saying anything about it. Income tax provision. How much? 180 like this. Or does it have 1,000 like this? Okay. What about the other? Okay. Education tax provision. That's all I'll be. Okay, so let's add it. What do we have?
Hello, sir.
Yes, ask your question.
So that exploration processing expenditure, why are we disallowing it? Is it not part of the mining expenses?
You know, join us when we started this class. Wait, did you join us when we started this class? Mining expenditure.
No.
The certified mining expenditure are not allowable expenses. Please. Certified mining expenditure are disallowable expenses. They are to be capitalized. They are capital in nature. And that's one of the things you watch out for if you have a question on mining expenditure, mining taxation. Please take note that there might even be more than one. Oh. Don't say, oh, it's just going to be one. There are some examples you saw, even in your Pathfinder. The next one, 2023. Yes, you can try it later at home. I think it's more than one, it was two. So if you are looking out for only one, you have to be able to identify. And that's where the trick comes in when you are solving questions on mining taxation. You have to be able to identify which one is capital in nature. Of course, there are indications and you see them, just like this one, that there was a dispute. You understand? So you watch out for expenditures to be capitalized. And they are to enjoy what? Accelerated capital allowance. So don't, of course, you see it is in the back of your question. You see mining expenditure there, 95% to initial allowance, no annual allowance there. The 5% balance will be carried forward till the day the asset is disposed. So what do we have here? 331.
331 250.
Okay. So add it together. Don't forget we are adding. Abi, what do you have? Add it together with your net profit. 1083,520. Is this our adjusted profit? No, thank you. So we are to less disallowable income, Abi. Yes. We have one disallowable income. Disposal of what?
of assets.
Disposal of machine. Disposal of machine. Okay. Yes. How much is that? 85. So you take it out because it's a disallowable income. Take it out. Then after you take it out, then you have your adjusted profit. And what's our adjusted profit? 1075. 2 0 to 0. Thank you. After our adjusted profits, what usually follows? Losses, Abi. But do we have any losses from previous years? No, no losses. Since there are no losses, we move to the next item. What? Capital allowance. Thank you. So we less capital allowance. Do we have any unrelieved or unutilized capital allowance brought forward? No. So we are only to calculate the capital allowance for the year. Very simple.
Please adjust your camera. I can't see some part of it.
So you can see if you follow this question step by step, just like any other question, then you're able to get your results. So let's quickly look at our capital allowance. We just have few assets. So we can make this workings. It shouldn't be part of this, your tax liability, please. Always do it separately. Don't bring in your capital allowance to your main calculation. It's just a side calculation. Capital allowance. I'm waiting for those that are still writing here before I move the camera off. What are our assets? The first one is what?
So is it the computation you say we should not do here?
Yes, please don't do your calculation of capital allowance here. Always do it separately. And that's what we want to do now.
Okay.
Yes, as part of your workings. So that it won't make your, of course, you cannot bring in your schedule, your capital allowance schedule inside your computation of tax liability. So motor vehicle, what other assets?
Furniture and fitting.
In mining expenditure.
Fitting.
The mining expenditure.
Furniture and fitting. And what? What?
Mining expenditure.
Mining expenditure. Okay,
Mining
mining expenditure. You're saying something. Yes, it's like addition now. You know the way we treat addition. Yes. You treat it the way we treat addition. Abi? So let's quickly look at it. What is our initial allowance? 50% Abi. Usually 50% Abi. And our allowance for motor vehicle
Yes,
is
sir.
5. For furniture and fitting is 25%.
Over
While our mining expenditure is
95.
and dash. Abi, nil. Of course, then we have our naira. This is in thousands. So our tax now value that we are giving. Don't forget, our year of assessment I want to complete is what? 2022. So this targeted value, of course, must be from the last or the previous period. So what is the value of our targeted now value? 25 what? 25,000 like this. Yes. This one is 22,500. And this one is what? 40,000. So we have an addition for that year. So addition. For motor vehicle, it was dash. For furniture and fitting, it was dash. For, thank you, 60 million. So 60,000.
50 million.
Yes. From this, our exploration. I hope we know how we got the 60 million from. Yeah? Madam, I hope you know where we got the 60 million naira from. Eh? Okay, I should just continue. Okay. So what do we do? Do we need to calculate? Yes, of course, our initial allowance, because we have addition.
Allowance.
Yeah, let's do our initial allowance. For this is dash, because of course there's no addition. For this is dash. Then for 60 million naira, what's our initial allowance? 95% of it.
57,000.
7,000. Thank you. So, of course, we need to do our annual allowance, right? Yes. So, our annual allowance. So, what's going to be our annual allowance? Don't forget we calculated it. That this one, how many years utilized have been remaining? What did they tell us? They told us 2 years.
Yes, remaining.
So, when we divide it by 2, we have
12,500.
we are good with that. Don't forget this is our initial allowance. Then for this one, they said is utilized for 2 years, so it's remaining 3 years. So if you divide it by 3, what do you have? 75.
75.
So are we going to have any annual allowance here?
Yes, we'll do for 2.
For the 2 and we'll add it together.
Because this one, of course, we must have been assumed that they've enjoyed 95%. It's only carrying 5%, Abi. So this one too, we have make use of the initial allowance, cannot enjoy annual allowance. So we have that shape, right? So we have that. So our targeting down value is this. So we bring this here 7,000 for our total, and we also bring this here. When you add 12,500 plus 7,500, you have what here? 20,000.
20.
By the time you add up these two, it gives you 77,000. So this is our capital allowance. So what's our tax written down value? Let us write it. So this 40,000 naira is like the 5%, Abi, that they have retained from the previous mining expenditure. You get? So let us, what's our value here, so that we know. Yes, 12,500, yes, of course. Then here is what? 43,000. So this one
Hello, sir.
forwards to the asset.
Hello.
Yes. Ask your question.
Hello, sir. I don't understand that 5% of that mining expenditure.
Okay. Yes. So for mining expenditure, the initial allowance for mining expenditure, the initial allowance is 95%, right? Of course, out of 100 is 95. Of course, there will be a balance of 5%. If you take away the initial allowance of 95% now from the, let's assume that the total amount is 100 and you take away 95, it will remain how many? 5, right?
5.
So that 5%, that 5 that is remaining, you keep it until the asset is disposed, which means that every year you're not going to charge annual allowance, like all other assets, like the motor vehicle, like the furnitures and fitting. You're not going to charge annual allowance. Once you have charged the initial allowance, which is 95%, the year the asset was acquired, the following year, you're not going to charge annual allowance. You just only keep the balance, which is the 5%, until the asset is disposed. Do you understand now?
Hello, sir. That tax written down value, when I added it, I was not getting 77,000.
Yes.
Sir, can you continue also with the formula for that annual allowance? That you got the 12,500, the 7,500.
Sir, the total, hello,
Are you saying
hello, sir.
that? Well, no, Please take note of whatever you have here cannot give you 77. You know, it's only what you have here, 7 and 20, that will give you this amount. We have been doing this thing
Okay.
for long. I believe we should have observed it. Maybe we have not mentioned it, but it's very, very critical. This total is not what you have here. Focus on what you are bringing here. You have 50,000 with your hand. You add these two together and bring it in. So you add whatever you have here, what you are taking to your what? To your calculation.
Thank you.
All right. So I believe we are all on the same page now. Any other questions?
My question, we are not true.
On the 5%, I've explained it. Now.
Yeah.
Yes.
Sir.
Go ahead.
The network is breaking. Then that 5%, now you said after the disposal, then after the disposal, do you still need to use it again?
And it is the year that you want to dispose the asset that you now utilize the 5%. So for example, now this for 3,000 naira now, you always carry it as your taxation down value for mining expenditure. You will not charge any annual allowance on it again. You should just be repeat. So if you want to do for the next year now, for example, maybe this is also another tax down value. If you want to do maybe for 2023 year of assessment, your annual allowance now for this will now be. So for example, the annual allowance now will now be, this one now is just remaining one more year. So it will just be 12,499 point. It depends on the number of assets. If it's, let's assume it's just one motor vehicle, 0.99, okay? It will be your annual allowance for this year. For this year now, 75, right? But for this one now, it will be dash. So you're not going to charge any annual allowance for your for your mining expenditure. So by the time you do the subtraction, your taxation down value. Of course, if you have utilized all this, it should just be 10 naira for this one. For this one, it will now be 75. But for this one, it will also be 43,000. Okay, so you keep carrying it until you dispose the asset. That's when, let's assume for 2024 year of assessment. Okay, you have decided to dispose the asset. Okay, so you still have your annual allowance will now be here. You still have your 10 naira. I mean, for here now, since it's only remaining 75. So you just take your last one, 7499, because you have to retain 10 naira per asset. Let's assume you just one asset, 7499.999. Okay, so you take it out. Then this one you now utilize the what? The 43,000. Since you have decided to dispose of the asset, you understand? So it's just keep it till you are ready to dispose the asset. I hope I've answered your question.
Mr. Wale, wait. The annual allowance of 12,500 and 15,000. Can you tell us how you got the formula you used, please?
Okay.
The first year for the year 2022.
Okay. If you check the, I just decided that I'm going to be answering all questions today because we just have time. We're almost done with the question. And once we are done with the question, we are done with this topic. So let's just take our time to answer all questions today. Right? You say, how did we get this 12,500? If you look at the assets, go to it, you will see that in front of motor vehicle, they wrote utilized for 2 years, right? For motor vehicle, is it remaining 2 years or utilized for 2 years? Remaining 2 years, okay. They wrote for motor vehicle, remaining what? 2 years remaining, Abi. The person that has a question, you are the one I'm asking, no. Hello? Unmute your mic so that I know that you are following.
Yes, sir.
So there's
Yes, I'm with you.
2 years remaining. So which means that out of the total lifespan of the asset, how many years is motor vehicle? You are supposed to recognize motor vehicle. How many years are you supposed to What is the lifespan of motor vehicle? I'm asking you, madam. What's the number of useful years of motor vehicle?
Actually,
Ma?
did not get your question. 4 years.
4 years.
Four.
Thank you. The number of useful life of your motor vehicle is supposed to be 4. And they said that 2 years remaining, which means that out of these 4 years, 2 years have been used. So if 2 years have been used out of these 4 years, how many years is remaining? I'm asking you, madam.
2 is the remaining. 2
Thank you.
years.
2 more years. So since it will remain 2 more years, let's now look at the start written down value that we have. From the question, they told us that it is 25,000. And you have identified that it has 2 more years. So since it has 2 more years, just divide the amount by 2. Then you arrive at what? 12,500. Do you get that?
Yeah, I did now. Thank you, sir.
All right, good. I hope we are all on the same page. Okay, I believe we are all on the same page. So let's now bring in our capital allowance. Let's now bring in our capital allowance. So if you want to bring a capital allowance, what's the value? 77,000, I mean. So can we check for restriction? Are we going to make use of everything? Yes. Yes, since it's less than 2/3 of the adjusted profit. So we say utilize. Let's now utilize everything. 77,000. Since you are going to be making use of everything, the balance will now be what? Nil. Abi, you don't have any capital allowance you'll be carrying forward. So let's utilize everything. At the end of the day, what will now be our total profit? $998,020. Okay, so this is our total profit. After our total profit, then we can now compute the what? CIT, Abi. So our CIT will now be what? CIT at 30%. So let's do the workings. Compute the CIT, compute the tertiary education tax. Let's do it. I'll be asking us.
Yeah. Okay.
Fine. Forward. Okay. So what is our tertiary education tax? Let's compute it. I will not tell us the rate. Okay, you said 2.5. Well, huh?
It's 22 years of assessment. It's 2.5.
Okay. So what's our answer? 2876.
1880668.
What are you calling for us, madam?
Is 18807.
26876.
Is it 26?
26,876.
What is our tertiary education tax?
26,876.
Right? So by the time you add up, so it's going to be 2.5 RD times our adjusted profit. Always make use of the adjusted profit when you are calculating your tertiary education tax, okay? I hope you get that. Please don't mix it up. Don't use your total profit when you are calculating tertiary education tax. Always make use of your adjusted profit. And the reason we are making use of 2.5% is because of the year of assessment. Due to the provision of Finance Act 2021, for 2022 year of assessment, 2023 year of assessment, our tertiary education moved from 2% to 2.5%. But from the provision of 2023 year of assessment, our tertiary education is now how many percent? 3%, effective from 2024 year of assessment date. So with this, our total tax liability or total tax paid, total tax paid or liability is the addition of these two, addition of your CIT and 326. Any question on this before we snap and send?
Sir, please, I have a question. Is it because it's a mining industry, that's why we don't restrict? And secondly, where will the accelerated capital allowance, where will it come in? As we were giving a scenario related to a question like that.
Okay, restrict what? Are you talking about the capital allowance?
Yes. Is it because it's a mining sector industry?
Even though it's a mining company, you will still restrict. But of course, you have to check for restriction before you restrict. If you check for restriction and the total capital allowance is below the restriction, then you utilize everything, right? But if it is above the restriction, then you restrict. So in this case, now you say you want to restrict, you first of all check what you want to restrict now. You first of all check if 22 two-thirds of your adjusted profits, if it is less than or higher than the capital allowance. We have checked it. It's not that we don't decide to utilize everything. You check for restriction. So because since it is below, what's it called? The capital allowance is below the restriction. Therefore, you utilize everything. So don't say because it's mining company, you don't restrict, you restrict. Then which other what was the second question?
So the second question is, as when we are given a scenario, where will the accelerated capital allowance come in?
Okay. Accelerated capital allowance will come in for only mining expenditure. Only mining expenditure. So you have to have a mining expenditure for you to be able to utilize the accelerated capital allowance. So in the question, always watch out for mining expenditure. It's majorly what is being disputed. Okay, and sometimes it might be more than one. So you need to be very, very observant. In this case now, our exploration expenditure or mining expenditure that we capitalize is only this 60 million naira. So you need to be very observant to know. So once you have identified the mining expenditure, then you can now, when you are computing your capital allowance, you bring it in as an addition. Okay, once you bring it in as an addition, then you calculate your initial allowance on it. The initial allowance on it is now the accelerated capital expenditure, which is now 95%. So your initial allowance is now your 95%. Once you complete your 95%, then the remaining 5% will come as part of your tax written down value. Okay, which means that you're not going to calculate annual allowance on it. So at the end of the day, you now retain that 5%, right? Till the day you decided, or to the year you decided to dispose of the asset. That's when you now enjoy the remaining 5%. I hope I've answered your question.
Yes, thank you.
All right, so let me snap this so that we can see it clearly. So please, there are other questions there in the material. I think about 2 of them. Just take your time and go through it. Just like I said, that this topic was tested in the last diet, and most likely we are not expecting it this diet. So for next week, I want us to take a break on calculation. Let's take a break on calculation for next week. We'll just go to 2 topics that does not involve calculation. It should just be on discussion so that you can have time to practice all the calculation that we have been doing from beginning. So just take your time this week, okay? Just take your time, go through all the calculation we've been doing from beginning. And next week also. So on Saturday, we'll be dealing with 2 topics. We'll be dealing with 2 topics together. Short topic. We'll look at base erosion and profit shifting. We'll also look at regional integration and trade blocks. Very short topics. I think about 5 pages or so. Yes, examinable questions. Examinable questions. I can set them. Yes, they are likely topics. There's no topic that I can does not test. But just that there are some that they will not test this diet. They will test, you understand? They usually, but there are some that are constant too. They test every diet, like the oil and gas taxation, capital gain tax, you know, part of, yes, CIT, sometimes pioneer. So, but we are just trying to see how we can carry ourselves along. At the end of the day, have a safe landing. So we'll look at those 2 topics. I'll send the materials on Friday. We'll discuss them. Then when we now
Hello,
come
sir.
back, we'll come back to
Hello,
CGT.
sir.
Yes. Ask your question.
Is mining part of a manufacturing industry?
No. Mining, what are they manufacturing? They are not manufacturing anything. They are mostly mining. I understand what you are trying to say. Maybe whatever they are mining, they are now manufacturing, you know. No, they are basically 2 things. For example, let's compare, let's look at the manufacturing company. Manufacturing company is just like maybe a company that, let's say they manufacture fabrics, okay? So you cannot really compare mining with a manufacturing company. They are different. Mining is more like,
Why
yeah?
I'm asking, sir, because for manufacturing industry, the capital allowance is not restricted. These are mining, so they still enjoy pioneer incentive. So I was thinking that their capital allowance should not be restricted also.
Okay, no. Even in manufacturing industry, they still enjoy, yes, pioneer incentives too. There are a lot of manufacturing industry, they have pioneer products too, that also have access to this pioneer incentive. Although mining companies, mining industry too, they have access to pioneer pioneer incentive, but that's not really the basis for that your judgment. I think you are still looking at the restriction, Abi, on capital allowance. Is that what you are looking at?
Yes, sir. Yes, sir.
No. When I said it from beginning that the mining taxation is also being regulated. Mining, we have the Mining Act 2008, as amended. We also have Company Income Tax Act, right? 2004, as amended. We also have the Personal Income Tax Act, 2004, as amended, right? So all these acts, they are also, CETA 2 is also, they are also being regulated by the Company Income Tax Act and all that. So you cannot say that because it's a mining industry, then capital, whatever provision is in company income tax concerning capital allowance, it affects mining companies, mining industries too. So don't look at it that maybe because it's a mining company, therefore the capital allowance is not restricted. Well, I wish we solve another question now. Okay, let's look at another question personally and see if we can see any question on this restriction. I don't want to believe that because it's a mining industry, capital allowance is not restricted. No.
Hello, sir. I hope it's not. I hope minimum tax can still apply now, despite a mining industry. If the
Yes.
turnover was up to 25 million.
Yes. Minimum tax can still
Okay.
apply. Yes. Any other question? I think we are done for today. So we are going to have a early closing today. If there are no questions, then we'll see next week.
Hello. Hello, good evening. Anybody there?